Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest, an investment fund manager, Charlotte Dunford of Johns Creek Capital. Before we dive in, I want to ask you a real quick favor. Would you mind please taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that 5-star review of the show. All right, let's dive in. Charlotte is the managing partner of Johns Creek Capital, an investment management company that focuses on mobile home parks, with total investor subscriptions over $4.2 million. Numbers-wise, they currently have 20 mobile home park investments, and Charlotte herself has created over $500,000 in asset value in the last 12 months. Charlotte comes from humble beginnings and is a first-generation American citizen and college graduate after leaving China with just her belongings at age 16. Charlotte, welcome to the show.
Thank you so much for having me.
Let's dive in here. Would you mind starting out by telling our listeners a little bit about your story and how you got into manufactured housing of all things?
Right. So manufactured housing is definitely a niche within the real estate market. So when I graduated college from Georgia Tech here, one of the top engineering schools here in the South, I took a corporate job that it focuses on data analytics. And I've always been interested in real estate ever since I was little. And here in the United States, you can actually own real estate. Like in China, where it's more of a communist regime where the only way to live in real estate is to lease it from the government for 70 years, and then you have to give it back. So you can never own anything. So I wanted to take the opportunity to buy real estate in America. So as soon as I started my first corporate job, I used my salary to finance the first deal, which was a single family home. And then I went on to a duplex using the same kind of financing structure, using my salary, but that only goes so far. And about a year and a half after I worked at my corporate job as a business analyst, I decided to take the jump to become a full-time investor and full-time entrepreneur. And that was a really risky move for me because my husband at the time, I was a student at college. He hasn't graduated yet. He didn't have an income. The little money saved and the little investments we had and the little 401k I had for 1.5 years was nothing to launch a venture, let alone live on it until the venture takes off. But I decided that it was a calculated risk because I educated myself a ton on real estate, and I would listen to podcasts on like yours every day through my 3-hour commute back to and back from work. So I've learned a lot, and through my actual experience investing in the duplex and single family home, I had the confidence to make the jump. And so I quit my job and started my own investment company. And at the beginning, it was a little tough because I wanted to get into multifamily like a lot of people do. However, it was extremely heated market. The cap rate was way too low for me to yield any kind of profit. The barrier to entry was extremely high for someone who had not really any background in multifamily investing. So I decided to look at different asset class, and mobile home park was still a very novel concept at the time. It was definitely an ignored topic. So I decided to look into that. And I'm a big believer in avoiding competition and doing something where most people do not recognize the potential for. And I think mobile home park was the perfect niche for me. And then I started getting into deals with mobile home parks. And this asset class, like any other real estate asset class, can be a tough asset to manage. But I think it offered me a ton of opportunities for higher cap rate. I went in at 10 to 12 cap rate, which is almost unheard of in multifamily assets. So and that's how I got into it.
I love that, Charlotte. And tell me, what year was that when you got in and you bought your first park?
So I bought my first park actually in 2019.
Okay.
August 2019. I quit in March of 2019. I bought my first park in August 2019, second park in November 2019, and third park in December 2019, and then 2020 had just been a rapidly growing, craziness. And up until now, we have 22 parks. And with the investor interest growing, we have just been really growing.
That is fantastic. Wow. That is so awesome. So take us back. You said 10 to 12 caps, and that piqued my interest. So what type of parks are you buying? What kind of fits the mold for Johns Creek Capital?
Right. So the parks we are buying have to go through a pretty rigorous algorithm that we develop internally, that we have certain parameters that this park needs to fit into. For example, public utilities, if it is, private sewer, it needs to be, at least septic, definitely not treatment plant or anything like that. As far as the high cap rate, I think it gets down to finding the deal that doesn't have a lot of problem, because if the cap rate is too high, and that could mean something's wrong with the deal. So you definitely want to do your due diligence to know that it goes down to negotiating, and there's a lot of power dynamics that change throughout a deal, from going into escrow to the end of closing. There is so much going on dynamic wise. There's always something going on. So you want to make sure you're a master at negotiating to be able to get the deal. You want to get that cap rate, the high cap rate. And overall, at the end of the day, seller motivations change based on the market, right? Right now, when you're looking at mobile home parks, 10 to 12 cap, it's a little bit more difficult. But when I got into at 2019, that was more realistic. But now in 2021, there has been so much interest in the space. I think the cap rate across the country has been lower to, on the high end, you'd be looking at 8%. So on the low end, you can get however low you want. So
sure.
Yeah.
And what's the average size of your communities? How many lots are those?
Right. So our parks actually focus on the small to medium size. So we have anywhere from 10 lots to 30 lots. So it's really we focus on the small to medium sized one, because those ones are, like I said, it's a niche within a niche, actually within a mobile home park asset class. And most people focus on the 50 lots and plus, and sometimes 100 lots, depends on who you are. But for us, I think the money is in the niches, and we wanted to focus on a particular area where we can make the numbers work, make the operating model work, even if it's a small park. So I think there is a special opportunity and potential there.
I agree with that. There's a lot of big investors, like the Carlyle Group, Apollo, Blackstone, all these huge investors getting into the space, and along with all these bigger funds, and they're all going after 100 lots or higher, open door capital, 100 lots or higher. So I think that you're right. I think there is a niche inside of that, and there's money to be made on these smaller parks.
Absolutely.
Answer me this: park-owned homes or tenant-owned homes? Which do you prefer?
Right. We definitely prefer tenant-owned homes. So I think that's something that everybody in the industry can agree on. Well, maybe not everybody. So it depends on what it is. For a park, mobile home park is a parking lot business. So if you want to get into the parking lot business, you should stay away from park-owned home, which is essentially fixing furnaces, fixing water leaks, running toilet. That's not something that we want to get into. And that goes against the operating model of the mobile home parks and really takes away the advantage. Now, having a park-owned home is not the end of the day. You have to look at the age of the home, the conditions of the homes. If the homes are really just dilapidated, or they're brand new model, that makes a big difference. So I think you can make more income if you have park-owned homes. It just really depends on the condition. But overall, I would say for the ability to finance the park at the end of the day, when you want to sell, for the buyer, for your own profit and sanity, I think it will be better to have a majority tenant-owned home in your portfolio.
And that's what you guys try to do? You buy them and then sell them off on like lease options or something similar?
Right. That will be the plan. I think that's actually a pretty good value add strategy. And, it really depends on the deal. A lot of deals, the deal only works if you have the income that comes from park-owned homes. And that could be a solid strategy. It really just depends on the model of the home, the condition, and how old they are, how much they really need maintenance, because they can be a pot of gold. But eventually you want to transition them off. And if you don't, you want to have a plan to see how you want to exit. So you just need an exit plan.
Yeah, there's different strategies out there. And not that I don't think one or the other could make more money. I just
Right.
think the tenant-owned home model is more scalable and it's just easier
Absolutely.
to manage. You agree?
Absolutely.
Yeah.
Absolutely. Yeah.
Tell me, on your smaller parks, what is your average expense ratio? What do your parks
So,
normally run at?
right. Good question. So I think for smaller parks, the average expense ratio, you're looking at 50 to 60%. It depends on how small it is because some real estate expenses are fixed. For example, real estate insurance, taxes, mobile home insurances. And even if you have a small park, like I said, that's another the disadvantage of a park-owned home is you have to mow the yard for the homes, and that's another expense. So some expenses are fixed, but some expenses are, so along with, for a bigger park, you're looking at 30 to 40% expense ratio. But smaller parks, you have that 30 to 40%, but some you still have to fix expenses. But that's not to say the profit margin is low. It's just you also have a higher revenue stream.
Sure.
And you also buy at a higher cap rate. So it really, there's so many factors that go into it. At the end of the day, is the final number that counts.
Oh, totally. Yeah, the bottom line for sure. And that's what I've noticed as well. On a few of our smaller parks, they just run a little bit higher on the expenses because there's just less units to kind of spread out the expenses over. So
for sure.
Yeah, that's
and
right on.
You want to buy the small parks at a very inexpensive price and a great deal because it's small. It has to be a really, really good deal. So.
And you're going to get better deals. Yeah,
exactly. Yeah.
Totally agree. Tell me this, Charlotte, what has been the toughest hurdle for you in the business thus far?
I think from an operational standpoint, the toughest hurdle would be, I think upon acquisition, it would be dealing with any code violations that the park has. And a lot of times an acquisition would trigger an inspection from the fire marshal. And we have dealt with parks where they inspected the park and told us that there are a ton of code violations that we have to fix. And that definitely is a hurdle. And from a business standpoint, from a Johns Creek Capital standpoint, the biggest hurdle would just be, I guess, for us, like any business, try to get the word out, put ourselves out there. And I think we're doing just that. But so in a nutshell, that would be it. Awesome.
And Charlotte, how do you handle the management of your parks? The property management day to day?
Yeah. So for day to day, we have the system is that my business partner is in charge of. He's the head of all property management and of the entire portfolio. But for individual parks, we also have local individual teams that handle that. So, because our parks span across 9 different states, and I think adding more now, 10. So there's no way to manage it unless you have localized teams to handle the day-to-day boots on the ground operations. So we have local contractors, even tenants within the park that we picked out to become the watch person of the park. And we have just really work with the town, with the city to have the right people on your local team to be able to handle the operation. So in a nutshell, it will be a smaller teams locally and then reporting to a higher level to us.
So you said 10 different states is what your portfolio is spread across? Wow. That has to be somewhat challenging, right? So you're based out of Georgia? Is that
correct?
Okay. So is it all in the Southeast, or are some, where are your properties located?
So the majority of them are in the Midwest and the Southeast. So we are focused primarily on landlord-friendly states and with certain policies that help the business model. There are certain places we wouldn't go to because of the economy and the market. But yeah, we're across a lot of different states, and those states, all of the markets we're in, it's really not about the state. A lot of times it's about the local market, and if the local economy and then the economy of the county, of the city, of the metro area is strong, then definitely that would fit into our criteria. So,
okay, thank you for sharing that. Tell us, Charlotte, how do you find your deals? Are you going through brokers? Are you going other avenues?
Yeah, so it's really like a funnel system for all of our deals. So all the channels that you mentioned, the broker, online, or relationship, the sellers that the sellers you've bought from, the people that you properties that you just drive by, any channel, all of the channels actually come together as a leads machine where we analyze the deals and make an offer, make a decision on it. So there isn't really any deal out there, at least for our small to medium level parks, that we haven't really looked at. So that I can say that as long as it exists out there, it's on the internet or it's in a broker's hand, we want to make sure that we get our hands on it to take a look and see if we want to pursue it.
Wonderful. So over your time period owning parks and investing in parks, what would you say are the most important things that passive investors, we're talking limited partners here, right, what are the things that they need to look out for when investing into the mobile home park asset class? The most important.
Right. So all of our investors are passive investors and limited partners. And I think the most important thing to look out for in this asset class is, it sounds cliche, but really you need to vet the sponsor, because at the end of the day, the asset class has its potential, and that is pretty obvious to a lot of people. And you really want to know that your sponsor is doing their homework and they have your best interest in line. And you really want to make sure that the deal structure your sponsor provides aligns their interest with yours, and they're working hard for your return. And for us, is we have a preferred rate of return, and then we have a waterfall structure. So that way, it makes sure that we're aligned with our investor interest. So you really want to make sure the sponsor is solid and the deal is solid as well. But I think that all comes from the sponsor. So.
I like that. Yeah. A lot of our visitors or guests on the show have mentioned, vetting the sponsor. And I totally agree with that. I like how you said, like alignment of interest with how the deal is structured, right, where there's a preferred return and a waterfall. So the investors win first, right? They're
exactly
risking their capital. And then the GPs win after that. I think if you're looking at a structure overall, I think that is probably one of the best,
right,
to kind of set up a deal
exactly
to earn their trust,
Yeah, exactly. And you want to make sure that their strategy, your sponsor, is really a believer in, that's what we believe in anyways, is that if you help others make money, you'll make money at the end of the day. And that really perfectly interprets the sponsorship, the structure. It really is, at the end of the day, everybody wins. If your investors win, you win. If not, you won't win. Totally. So I think that's important.
Oh, definitely. Charlotte, tell us what the perfect mobile home park looks like in your eyes and why.
I think right now a perfect mobile home park would look like, I think lot number is, there are two ways to look at it. So from the structure of the park will be all public utilities directly billed back to tenants. You look at 50 lots with all tenant-owned homes, market lot rent, not at market, but slightly below market, with some room to improve and to increase rents, and also in a major MSA. But again, if it is, and then from the deal numbers perspective, regardless of the park size, the park infrastructure size or infrastructure type, you'd be looking at a cap rate and the interest rate difference about 3 to 5%. Because if you're buying at a cap, you want to make sure your interest rate is at least 5% or below. Because with smaller than that, it's just not making sense mathematically. So two ways to look at this: mathematically and from the operational infrastructure of the park.
Totally. And I'm a fan of Frank Rolfe when he says, you want a 3-point spread, like you said, between your cap rate and your interest rate, because that'll generate a 20% return on the invested capital. So if you're getting a 5% gap between the interest rate and the cap rate, you're spreading it a little bit wider, which is really great.
The bigger the better, right? So
the bigger the better. Yeah.
Yeah. For spread. Yeah.
Awesome. Charlotte, tell us, what are some mistakes you've made so far in the space?
Right. So I think mistakes, I think I would say that for it's actually not in our portfolio. It's my own personal park that I acquired the second park that I acquired with my own money, and there are no investors involved. So for that one, I think the biggest mistake, again, I didn't have enough spread. The spread was way too small, and the tenant base was just not solid, and the non-payment was a big issue, and especially during the COVID. Well, we're still going through that, but during the eviction moratorium, they didn't have to pay rent, which really made it difficult for me to operate. So that, I guess, the biggest mistake is not having enough spread and not having a solid tenant base.
What is the value proposition at Johns Creek Capital? What would you say makes you guys different from other operators out there?
I would say that we really offer, one is the personal experience, the customer relationships that we have with our investors. And two, our deal structure is actually is very attractive compared with a lot of the deals out there. I think a lot of operators offer maybe 7% preferred rate of return, and then the rest of that, you just split it 50-50. But we actually have a 8% preferred rate of return, and then a waterfall structure after that. And then thirdly, I think really our value proposition, what we're really focused on, really brings back to the topic of this talk, is really that we focus on small to medium level parks, and we really focus on a different cap rate to begin with, and it's a solid deal to begin with. So every single one of our deals, the deals can stand on its own without pouring a ton of capital to it. So that's important to us, because it starts cash flow positive from day one. We don't want something that sinks from day one. You have to put Band-Aid on it just for it to stop bleeding. So I think, just really being a different niche within the niche, that's really our difference. And other than that, I think it boils down to who we are as people. So, about my background, and my partner's background is also very fascinating. He's had a lot of experience, raising funds, running different assets. He's run funds before, and he has a really fantastic life story. I think probably more interesting than mine even. So I think all of those above really makes up who we are.
Yeah. Would you mind sharing the name of your partner, Charlotte?
Yeah. His name's Rick Klupp.
Rick Klupp?
Klupp.
Klupp. Okay. Yeah. Would love to, maybe have him on the show at some point. And he's the one that is in charge of the property management, correct?
Correct. He is.
Okay. Awesome. Yeah. Because I would love to learn more about that, because that's been one of the hurdles for us in my portfolio, is with these smaller parks, they're more labor intensive. They're harder to manage.
They are.
And get a good on-site manager that sticks around has been difficult, because you're not able to pay them as much.
Right.
So would love to have Rick on the show to share some of his top secret tips.
Yeah, definitely. So it's really a business strategy that both of us will have to, think about. So for smaller parks, you can't think about it in the same way as a big park, and you can't operate it the same way. Like an on-site manager, that simply doesn't work. So you can't really pay someone like 8% or something to manage a small park. It just doesn't work for on-site manager, and you just have to think outside of the box about how you manage things there. Yeah.
All right, great. I definitely think you have a unique niche, that will enable you to transact, because I think there's some other operators getting creative. I saw there was a recent investment fund that was just for private utilities. Like they were targeting private utility parks to try to differentiate themselves as mobile home parks become more popular. So,
I think that's a good idea. Why not?
Yeah, if you're comfortable with it and
it's a bigger risk,
about it,
but you can have a lot of cash flow. That's another topic. Yeah.
Totally. Awesome, Charlotte. Well, how can our listeners get a hold of you if they'd like to do so?
Right. So they can contact me at cdunford@johnscreekcapital.com, or you can just go to our website at johnscreekcapital.com, and there will be a contact us tab, and you'll be able to fill out a form and contact me there. And and I'm sure you will link the contact info below your episode.
I will. I'll put that in there.
For sure.
Thank you so much for joining me, Charlotte. This was awesome.
Thank you so much.
Yeah, that's it for today, folks. Thank you all so much for tuning in. Hey, are you getting value out of this show? If so,
Would you mind please going over to iTunes and leaving the show a quick 5-star review? I have a goal of hitting over 100 5-star reviews by the end of 2021, and it would mean the absolute world to me if you could help contribute to that. Thanks ahead of time for making my day with your 5-star review of the show.